statements with adjustments. In this module, you will learn about financial adjustments and their treatment in the financial statement. As we know, financial statements are the most reliable records of the financial activities of a business. A detailed analysis of financial statements helps to know whether the firm is earning profits or suffering losses. Are included in the financial statement. Adjustments are the transactions that are omitted in the books of accounts or any other wrong entry that has been passed in the books for such transactions. Generally, adjustments are shown separately outside the trial balance. While preparing the final accounts, treatment of all such adjustments are essentially shown in the books. Treatment for each adjustment will make double effect as per the rule of the double entry system. Now let us consider some of the most commonly found adjustments and their treatment. Closing stock. Closing stock is the unused stock of raw materials or unsold stock of the goods available at the end of an accounting year. Value of closing stock appears in the credit side of the trading account and also in the asset side of the balance sheet. Its journal treatment will be as follows. Closing stock account, debit to trading account. Another adjustment is related to depreciation. Depreciation is the decreased value of an asset that diminishes gradually with the use of that asset. The amount of depreciation appears in the debit side of the profit and loss account and reduces the value of the particular asset from the balance sheet. Journal treatment will be depreciation account debit to fixed assets account. Profit and loss account debit to depreciation account. Another adjustment is related to outstanding expenses that have occurred in the current year, but payment is made in the future. Amount of outstanding expenses account in the debit side of the trading account or profit and loss account, and also appears in the liabilities side of the balance sheet. Journal treatment will be expense account, debit to outstanding expense account. Another adjustment is related to prepaid expenses. Prepaid expense is the expense that is paid in advance, but benefits of the amount paid will be available in the future accounting year. Amount of prepaid expense will be deducted from the respective expenses account in the debit side of the trading account or profit and loss account and also appears in the asset side of the balance sheet. Journal treatment will be prepaid expense account debited to expense account. Another adjustment is related to accrued or outstanding income. Accrued incomes or outstanding incomes are the incomes that are earned in the current accounting year, but are yet to be received till the end of the current accounting year. The amount of accrued income will be added to the concerned item in the credit side of the profit and loss account, and it also appears separately in the asset side of the balance sheet with its full value. Journal treatment will be accrued income account debit to income account. Another adjustment is related to prepaid income or unearned income. Prepaid income or unearned income is the income that is received in the current accounting year, but it actually relates to the future accounting year. The amount of prepaid income will be deducted from the concerned transaction or item in the profit and loss account and will be shown in the liabilities side of the balance sheet. Journal treatment will be income account, debit to prepaid income account. Another company. Profit and loss account. Adjustment is bad debt is the amount of debt that has ended up as irrecoverable from the debtors. The debt once considered to be bad will be written off by the company as an expense. Thus, it results in reduction in the net income of the company. Most companies make a bad debt allowance or provisions since it is unlikely that all the debtors will repay in full. Bad debts will appear in the debit side of the profit and loss account, and the respective debtors account will be reduced by that amount in the balance sheet. Annual treatment will debtors account, profit and loss account, debit to bad debts account. Another adjustment is related to provisions for doubtful debts. Provisions for doubtful debts is maintained by a company to cover the loss caused due to the irrecoverable amount of debt. It is shown in the debit side of the profit and loss account and deducted from the debtors in the balance sheet. Journal treatment will be profit and loss account, debit to provisions for doubtful debts account. Adjustment is related to manager's commission. Occasionally, manager of the business gets commission on profit for his overt services. Such commission may be charged with a fixed percentage on net profits before charging such commission or on net profits after charging such commission. It is shown in the debit side of the profit and loss account and also on the liabilities side of the balance sheet. Journal treatment will be manager's commission account, debit to outstanding commission account.
कोई और रिक्वायरमेंट सर आपकी बीएस में? बताओ, बीएस पे कुछ पढ़ना है? बताओ तो अभी पढ़ा देता हूँ, इससे अपन इसको भी सुन लेते हैं इसकी क्या कहानी है। वो इंटरनेशनल वाला